Next time on Colonial House, the harvest is in, but resentment rules the day.
So today everyone's going to be doing firewood, except for Jonathan and Dominic. It's not fair.
And after 4.5 months, the colony faces Judgment Day.
As representatives of the financial backers, we would recommend whether they continue this colony or whether they would dissolve it.
Is this a viable colony? Should they continue to fund us? The answer's got to be yes.
Join us tonight at 8 here on OPB.
This week on Oregon Field Guide, a rare behind-the-scenes look at the divers who volunteer their time at the Oregon Coast Aquarium. And since we're wet already, we'll also go in search of the elusive lamprey and find out some of its secrets.
When they do build their nest, they build a real nice perimeter of rocks.
Then we're off to the races with some very special athletes. This is one sporting event you shouldn't miss.
Oregon Field Guide, Thursday night at 8:30.
They're out there, hitting the streets, finding the facts, not resting until they uncover the truth. The history detectives are back on the case.
When it all started, record companies were run by people who loved records.
Rock and roll is here to stay.
They've made business more important than the art.
It's better to burn out than to fade away.
They're putting themselves out of business.
Thursday night at 9 here on OPB.
For one day every year, Americans join together to honor those who have served and sacrificed. This year, it means more to all of us. Live from the West Lawn of the U.S. Capitol, a moving tribute with a special appearance by Tom Hanks. The National Memorial Day Concert.
This is OPB.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following.
Union Bank of California, providing personal and business banking services, trust, and investment management to the Pacific Northwest since 1882.
Oil prices go down, stock prices go up, investors go on a buying binge. A drop in crude futures spurs pretty slick gains on Wall Street. The Dow climbs almost 160 points. The Nasdaq closes up 41.
President Bush zeroes in on health care at a campaign stop in Ohio. We'll look at how the rising cost of health care is becoming a key issue on the road to the White House.
Dick Grasso is fighting back. He will sue the stock exchange that employed him for 30 years after he was sued over his pay package. We get some analysis on this legal case and how it could affect corporate America.
Also tonight, the changing face of America's heartland, from frontier pioneers to modern-day ghost towns. We begin a series of reports looking at the future of the nation's Midwest farm towns.
I'm Paul Kangas.
And I'm Linda O'Brien. Susie Garib is off tonight. This is Nightly Business Report for Tuesday, May 25th.
Nightly Business Report is made possible by Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
When financial consultants are free to do whatever's right for their clients tend to really appreciate them. A.G. Edwards, fully invested in our clients.
From assembly lines to power lines to the bottom line, it's experience that counts. We see business issues from every perspective. Deloitte.
Good evening, everyone. Stock prices caught fire today as the price of oil cooled off. The Dow surged almost 160 points. The NASDAQ climbed 41 as both indices closed at their highest level in almost 3 weeks. Oil ended the day off 58 cents to $41.14 a barrel. Suzanne Pratt looks at whether crude prices have finally peaked or are poised to head even higher.
Although it doesn't exactly look calm, trading in the New York oil pits today was actually a bit more subdued than recent days. With oil still well above $40 a barrel, traders took profits. Nevertheless, many say today's downward move was purely technical.
We had such abrupt up moves over the last couple of days that the market was due for a little bit of a breather here, and that's what you're seeing here, a technical move to the downside. But I think overall, as we head, in the latter part of this week and into next week, I think you'll see the market rally back up again.
Just how high oil prices will go in the next few months is a matter of great debate on Wall Street. Many in the pits see crude topping $45 a barrel this summer, and they predict unleaded gasoline futures will exceed $1.50 a gallon, which translates into $2.50 at the pump in many regions of the country. Supporting the high prices, the same old story of demand exceeding supply. On top of that, some predict continued hedge fund buying and gasoline supply disruptions because of refinery troubles.
Typically during the summer, you'll at least have 2 to 3 refinery problems, and I'm going to have to think that those refinery problems will go through sometime during the summer.
Others, however, say the energy markets are ripe for a big sell-off. They believe crude probably peaked at $42 a barrel and predict it will trade in a new range of $32 to $42 a barrel within the next year.
Demand will decrease. Demand is decreasing as people change their habits. Less people drive. Corporations are making changes in the use of oil.
Tomorrow, oil markets get fresh supply data, which should give new direction to prices. Most experts say petroleum stocks have grown, but they worry the gains won't be enough to calm a nervous market. Suzanne Pratt, Nightly Business Report, New York.
Stocks opened modestly lower as investors cast a wary eye on oil prices heading higher early in the day. But buyers gradually took the upper hand on news of a solid 2.5% rise in existing home sales in April and a small rise in Conference Board's May Consumer Confidence Index. That recovery turned into a full-fledged rally by midday when oil prices headed south. The strong comeback in the market triggered a flurry of short covering by scared bears, and the market ended near its very best level of the day. The Dow Industrial Average closed up 159.19 points, or 1.6%. And now stands at 10,117.62. The NASDAQ Composite soared 41 2/3 points, or 2.2%, ending at 1964.65. Standard & Poor's 500 index rose 17 2/3 points, or 1.6%, at 1113.05. In the bond market, the 10-year note rose 3/32 to par and 7/32, putting the yield at 4.72%.
After a 4-day strike, SBC Communications and its biggest union reached a new contract today. The deal between the company and 100,000 members of the Communications Workers of America includes annual pay hikes and a 5-year ban on some layoffs. But it also requires employees to pay more for their health care. Among the changes, higher co-payments for prescription drugs and a monthly fee for a spouse or partner to be covered by company health insurance. SBC says the changes will help save it $2 billion a year in costs.
SBC is just one of many U.S. companies cutting back on health care benefits. Those companies say soaring health care costs and the need to cut expenses to stay competitive are the reasons why. But as Stephanie Woods reports, the trend toward cutbacks in benefits is now causing political fallout.
Workers at SBC, Safeway, and even Microsoft have seen their health care benefits diminish. Experts say as long as companies facing increased competition can attract employees with fewer benefits, they'll continue to cut back.
Even with labor force tightening, many companies are going to find that these combined competitive pressures plus high health inflation causes them to have to continue to cut health benefits.
Both presidential candidates are offering solutions. Senator Kerry and President Bush both support tax credits for people who purchase their own health insurance. They both want to open up larger purchasing pools for small businesses and individuals so they can take advantage of group discounts. Kerry proposes having the federal government pick up the cost of the most catastrophic cases. Kerry's plan would cost more, but would cover more people. President Bush focuses on expanding tax-preferred health savings accounts and reducing medical costs. Today, he emphasized increased funding for more community health care centers, which treat both insured and uninsured patients.
It's a common-sense approach to making sure that the health care system works.
But an improving labor market may keep employers from slashing benefits.
These companies that are doing very well and have very strong profits and are still cutting back on benefits, for them, the strong labor market should make a difference because they will then feel more pressure to actively compete to attract new workers, and they can afford to do so.
But job growth will have to increase for a couple of years before employees are likely to see a boost in benefits. And even then, lower-skilled workers may not share in those gains. Analysts say that means politicians will face increasing pressure to find the right cure for health care. Stephanie Woods, Nightly Business Report, Washington.
A day after being sued over his pay package by New York's Attorney General, former New York Stock Exchange Chairman Dick Grasso is firing back. Today, Grasso said he will sue the exchange seeking unpaid compensation and damages for what he called leaks defaming him. The battle between Elliot Spitzer and Dick Grasso is shaping up to be long and bitter. To get some perspective on this case, I talked with Jack Coffey, law professor at Columbia University in New York City. I began by asking him about today's developments and why Grasso is planning to countersue the exchange.
Well, I think it's predictable in this kind of high-stakes litigation where there's plenty of ego and even more testosterone on both sides that you try to top what the other side did. He is sued, he responds with a countersuit, alleges a conspiracy to defame him. It'll be very hard to prove, but it's a way of seizing the momentum and the advantage.
Now, Elliot Spitzer filed the lawsuit under New York's not-for-profit corporation law. What will Mr. Spitzer have to do to win this lawsuit?
Well, he's got a statute that says in the case of not-for-profit corporations, like the New York Stock Exchange or a college or a hospital, that kind of entity can only pay reasonable compensation. And that reasonable compensation has to be determined at a level that's commensurate with your duties. Now, based on that, I think you can look at what other kinds of not-for-profit CEOs make, what other kinds of market center CEOs pay, and all of them would make a fraction of the $30 million a year that Mr. Grasso was making at the high point in 2000.
A lot of focus has been on Mr. Grasso's compensation package, but there are other public policy issues you say that have not received as much attention. Why is that?
Well, I think the critical issue here is not excess compensation. That can be an issue at any company, but rather that there was a motive, an incentive to pay excess compensation because the members of this compensation committee were all CEOs of broker-dealer firms that were regulated by the New York Stock Exchange. Thus, you have an incentive to overpay your regulator to keep him quiet and happy. We don't know that that happened, but that's a background theme in Mr. Spitzer's suit.
But did they have the full knowledge of what was happening?
Well, that's still an additional theory. Mr. Spitzer has every possible theory here. Excess compensation, conflicts of interest, and fraud on the committee, and manipulation of both the committee and its advisors. He says, finally, that the staff that Mr. Grasso used deliberately withheld critical information from the compensation committee. So any one of these theories he could win on.
A lot of issues here. Do you think this case will in fact go to trial, or will it result in a settlement?
I'm sure that it won't settle early. You have two very strong actors here, neither of whom has much more to lose. Mr. Spitzer indicated yesterday that he wants to get back $100 million. He can't settle tomorrow or next month for 30 or 40 million because the press would treat that as a symbolic defeat. So neither side is able to back down for the foreseeable future, and this could go to a trial.
What will the fallout be from this case, both from a legal and a corporate governance standpoint?
Well, I think the New York Stock Exchange does suffer some injury. I think it's clear that there was a problem here, and the Stock Exchange has significantly reformed its corporate governance already
to make sure that no one on the New York Stock Exchange Board has any kind of regulatory position in the industry where they are the subject of New York Stock Exchange enforcement or oversight. That was very important, and I think that eliminated the most important change. But beyond that, I think we've seen a traditional story of the CEO manipulating the compensation committee, hiring the advisors himself, loading the information and biasing it. And that occurs at many other companies and is the subject of a growing amount of litigation.
Thank you for those insights. Okay. We'll keep watching. Jack Coffey, law professor at Columbia University in New York City.
Now, let's take a look at some stocks in the news tonight. Big board volume leader, a new issue, the largest IPO of the year so far, Genworth Financial. This is General Electric's life and mortgage insurance unit. It's selling off 30% of it. 145 million shares offered to the public at $19.50, opened at $18.75, below that price, got as high as $19.51 and then backed off to the offering price. GE still owns 70% and wants to sell all of it eventually. Then came Medtronic, down 23 cents after the close yesterday. Good fourth quarter earnings, 47 cents up from last year's 40 cents, 24% rise in sales. But apparently early trials of the company's drug-coated cardiac stent didn't meet all expectations. Charles Schwab down 28 cents, traded as low as $8.75. On news, the company is sharply cutting its online stock trading commissions in hopes of attracting more business. General Electric itself moved up 43 cents. Altria Group, the big tobacco, up $1.74. That helped the Dow. Wyeth was down $2.66. Lucent, 4-cent gain. Pfizer, 29-cent rise. Boston Scientific up $2.87. The company had positive 9-month results from a study of its moderate-released taxis-eluting stent, and apparently it's safe and effective even in high-risk patients. Texas Instruments' 10th in volume was up 48 cents. H.J. Heinz cut the mustard today, up 54 cents. Fourth quarter earnings nicely higher, 55 cents versus 29 a year ago. Excluding one-time items, those earnings actually moved up to 58 cents. That was about in line with street estimates. Humana up $1.53. Goldman Sachs upgraded it from underperform to in line. Then Tenneco Automotive up $1.86. The company withdrew an offering of 11.9 million common shares due to market volatility. Toro up $4.47. The second quarter earnings sharply higher, $2 versus $1.61 a year ago. Revenues up 11%. Janney Montgomery Scott Brokerage upgraded it from hold to buy. And then Houston Exploration moving up $4.07. Keyspan Corp will transfer about half of its stake in the company back to Houston Exploration in exchange for complete ownership of a Houston gas-producing unit. This cuts Keyspan's stake in the Houston Corporation from 55% down to 24%. Incidentally, Keyspan stock moved up 77 cents a share. Longview Fiber up $1.46. 12-cent for second quarter earnings, way up from a penny last year. And finally, we see Krispy Kreme donuts up only 3 cents, traded as low as $19.25. Apparently, the low-carb craze put a hole in the company's first quarter results, a loss of 38 cents versus earnings last year. But excluding one-time items, first quarter earnings of 23 cents, that was about in line with expectations. Cisco topped the active list on NASDAQ, up 59 cents, and then Intel, 36-cent gain. Applied Materials up $0.50. Microsoft, 34-cent rise. Invitrogen up $1.88, fifth in dollar volume. And then eBay, $3.22 to the good. Qualcomm up $1.35, 90-cent gain in Research in Motion. Yahoo up 85 cents. Amazon.com nearly a $2 gain there. Then Diax Corp plunging $4.15. FDA has halted trials of the company's DX88 drug to treat angioedema, saying more information is needed. And then we see Swift Transportation up $3.08. Company sees second quarter earnings 24 to 30 cents, well above the 22 cents Wall Street estimate. Also going to buy back $40 million of its stock. Those are the stocks in the news tonight. Linda?
Well, Paul, 200 years ago, small towns were the backbone of America's Midwest, providing economic opportunity to their residents. But now those small towns are growing smaller, with hundreds of farming villages threatening to turn into ghost towns in the nation's agricultural heartland. Tonight, as we begin a series of reports called Farmtown Futures, reporter Jeff Yasteen looks at the depopulation of the Midwest farm communities and what some people are doing about it.
The bells are ringing in Stratton, Nebraska. Situated in the southwest corner of Nebraska's Great Plains, this farming community was founded in the late 1800s by settlers following the railroad west across the prairie. Since then, some things have not changed. The railroad is still a major thoroughfare for the transport of coal and other commodities, and farming continues to be the dominant industry around Stratton. But when the 2000 census came out a few years ago, townsfolk here received a wake-up call that things indeed were changing, but not for the better. The census showed that the surrounding area had lost roughly 1/4 of its population in just 10 years' time. Stratton itself lost 16% of its population, a big loss for a community now numbering just 400 people. Town Mayor Richard Burnt is a banker and one-time farmer. He says those population losses reflect the broader changes going on in Midwest agriculture.
When I was younger, you know, when I first started farming in the early 70s, you know, a lot of 4-row, 6-row tillage equipment and, you know, combines, things of that nature. Now we're talking, you know, 12, you know, 24-row. It just takes less and less, or people can farm more and more ground with less and less labor. And that's a big player. There's no question about that.
The depopulation of the Midwest farming communities is a drama that's been playing out for decades. Towns that once had 1,000 or more residents early in the 20th century now have populations of several hundred or less. Churches close, schools close, some villages have disappeared altogether.
To a large extent, these communities were formed to be the link between farmers and the farm community and the national economy. And as the farm and ranch share of profit in the food system shrinks and the number of farmers and ranchers shrink, the opportunities in these communities shrink.
A bleak picture? Well, perhaps. But is it the end of the story for the remaining towns? Many here say no. In Stratton, that means looking for a business opportunity, one that could turn the town's small size and isolation far from the nearest interstate highway from a negative into a positive. Success came with this upscale modular housing company, Timber Creek Homes. The firm started operations in Stratton in 2001, building prefabricated custom houses in sections which can be shipped by truck and reassembled at an owner's property site.
In rural communities, you usually find people who number one, they have a good work ethic as a rule, and number two, they are usually good in working with their hands, which is what our industry requires, and number three, the educational system is such that if they get through school, they usually read, write, and are highly trainable.
Timber Creek now employs nearly 50 people from Stratton and the surrounding area, and it's looking to hire even more. With Stratton's fortunes now beginning to change, townsfolk have modest goals: attract more families, start gaining population again, and keep Stratton on the map.
You're always going to have new opportunities. We had Timber Creek move in, and that was a wonderful opportunity for us, and we took advantage of that. But if we can maintain what we have and take advantage of the opportunities as they come along, that's really should be our desire.
Jeff Yasteen, Nightly Business Report, Stratton, Nebraska.
Tomorrow, from sheep to soaps, a look at how entrepreneurs are changing the face of America's farm town.
A former Merrill Lynch analyst is in hot water for his coverage of Tyco International. The NASD fined Huang Young $225,000 today and suspended him for a year for providing misleading and skewed research. The NASD says Young's coverage of Tyco violated industry standards for objectivity. Young gave the head of Tyco a $4,500 case of wine and once referred to himself as, quote, a loyal Tyco employee.
Shares of Elan Pharmaceuticals jumped almost 9% today after the Irish drug maker filed for FDA approval of its drug Antigrin for the treatment of multiple sclerosis. Analysts say approval could come as early as November, with the drug on the market by next spring. Elan shares were up $1.87, closing at $23.18.
a look at what's happening tomorrow. A light day on the economic calendar with just the April reports on durable goods orders and new home sales. Tonight's commentator is thinking about the Federal Reserve and the cross-current of data the panel will look at when it meets next month. Here's Charles Schultz, Senior Fellow at the Brookings Institution.
Outside of energy prices, many of the underlying factors determining inflation appear to be favorable. There's still excess capacity around, and while employment has begun to pick up, the labor market remains slack, the growth in worker compensation is modest, and with productivity growing nicely, the labor cost of production has increased little. Profit margins are high, and some cost increases could be absorbed. Yet, between January and April, inflation in the Consumer Price Index, excluding the volatile food and energy sectors, jumped to over 3% from the 1% rate of the preceding year. Increases in rent and medical care prices speeded up. Prices of consumer commodities, which had fallen by over 2% last year, began to rise again. Market fears of growing inflation were partly responsible for the recent surge in long-term interest rates. Of course, a few months of rising inflation isn't long enough to make a good judgment about the state of inflationary pressures. And a separate measure of consumer prices from the Department of Commerce has accelerated a good bit less than the Consumer Price Index. Nevertheless, out of prudence, the Fed is almost sure to raise the funds rate when it meets in late June. And if in the interim the incoming inflation and employment data continue strong, the Fed will also signal the likelihood of further rate increases in succeeding months. I'm Charles Schultz.
Recapping today's market action, a drop in oil prices sends stocks higher all around. The Dow gains almost 160 points. NASDAQ Composite climbs 41. And please be sure to join us at our worldwide website, nbr.com.
And that's Nightly Business Report for Tuesday, May 25th. I'm Linda O'Brien. Good night, everyone, and good night to you too, Paul.
Good night, Linda. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by...
From the old economy to the new economy to the next economy, every business knows the importance of getting it right. We see business issues from every perspective. Deloitte.
When financial consultants are free to do whatever's right for their clients tend to really appreciate them. AG Edwards, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective. And made possible by the financial support of viewers like you. Thank you.
Stay with OPB. The News Hour with Jim Lehrer is next.
If you're selling your home, find out how to maximize your return in NBR's video, Home Sweet Home. To order by credit card, call 1-800-535-5864.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following.
Union Bank of California, providing personal and business banking services, trust, and investment management to the Pacific Northwest since 1882.
Next time on Colonial House, the harvest is in, but resentment rules the day.
So today everyone's going to be doing firewood, except for Jonathan and Dominic. It's not fair.
And after 4.5 months, the colony faces Judgment Day.
As representatives of the financial backers, we would recommend whether they continue this colony or whether they would dissolve it.
Is this a viable colony? Should they continue to fund us? The answer's got to be yes.
Join us tonight at 8 here on